Hi everyone, today let's talk about how to invest in AI without buying more tech stocks. Then of course we'll get into all of the longer term charts as we head into this end of the year trading. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So how do we invest in AI without buying more tech stocks? Of course, they start to look at metals here, right? So metals are kind of the play: copper, uranium, and rare earths. Copper being at the top of the list, obviously a highly conductive metal, highly heat efficient, very important for running AI servers, power grids, and renewable energy tech. And they say here from Bloomberg, 572 metric tons of the stuff will be required by 2028, pushing up copper demand by 18% by 2040. So definitely a lot of copper is going to be needed. And then you have uranium, expected to drive 2.5% growth in energy demand, which means probably going to push towards the nuclear side, which looks very attractive. Again, could triple by 2050. And uranium demand is expected to grow 4% a year through 2035, and the supply is only growing by 2% right now. So definitely opportunity there. And then the last one they highlight is rare earths. Rare earths are driving the humanoid robot build out, and Boston Dynamics is expecting to make 1 billion of these things by 2050. And that's just Boston Dynamics. You have all of the other players, to include Tesla, trying to get into this space, and they all require about 6 pounds of rare earth magnets, and the industrial bots could require 7 times as many, which generates a potential for 50% compounded growth in rare earths by 2035. So what does that mean for us? It means to try to invest in some of the companies here that mine copper, mine rare earths, and then mine uranium. And these are the examples that they give. Pure play copper producer, high quality reserves in Chile, one of the richest copper belts in the world. Long-term play as copper demand is set to build. Rare earths kind of looks like the best one on the board in my opinion. M&P Materials, rare earths, the only one in the United States. They're backed by the DoD, and they have signed a big contract with Apple. And then you got the Kazakhstan-based firm producing uranium at a relatively low cost, eco-friendly extraction method, and demand is climbing while supply is still trying to catch up, which does give them a bit of an advantage. Moving over to Fear and Greed, we finished the week at a 22, down just a smidgen from a 24. There was a little bit of wave in there. You can see we spiked up and then came back down. So there was definitely a slight bit of bullishness, but ultimately ended up pretty bearish here. Still fear on momentum strength. Still extreme fear, really extreme fear across almost all the metrics except for volatility, which did kind of come down just a little bit, still elevated, but came down a smidgen. And then safe haven demand and junk bonds, both in extreme fear. Moving over to the AAII survey, this was a pretty big step for the bears, 49%. Bears coming through aggressively, the bulls getting squeezed to the downside. For me, this says we might see just a smidgen of a bounce. There's a lot of bears in here pretty quickly. Eventually this won't matter too much, but bears coming in so hot so quick, might see just a smidgen of a bounce, and then we'll probably see that fall through to the downside. But just keep this in the back of your mind. If we do get a little bit of a bounce, it does make sense. Moving over to seasonality here, you can see this is supposed to be a pretty bullish period. We're starting to see a little bit of a dip here, which actually seasonally does make sense. You can see this potential for a dip of about 1% in here. Next week, we'll see if we kind of dip in there and then get that rally through the end of the month. But so far, a little bit bearish makes sense. Moving over to the seasonal calendar here, you can see option expiration is typically pretty bullish here, up 14 of the last 21. Bullish for the Tuesday, bullish for expiration day. And remember, this is that expiration week, so there's going to be tons of options in here. And there's supposed to be a lot of data as well. We'll see if we start to get that data now that the government is open once again. Moving over to earnings calendar here, you can see Home Depot, Medtronic for Tuesday. Wednesday is really the only reason that I'm mentioning this. Once again, you got NVIDIA in the after hours. A couple other companies, Lowe's, Target. Pretty big one for Thursday. Walmart coming out, as well as Intuit coming out. Walmart is in the pre-market, so keep that in mind. Almost $1 trillion company, pretty big for Walmart. Moving over to Max Payne here, you can see put call ratio at a 4.24. Total options, not a ton actually, for an options expiration 2.79 million for the S&Ps. Max Payne is at 570, and we are pretty much right on top of that. Lots and lots of puts here. 670, 666, 660, and then 650. So really wouldn't expect to see it fall too much. You can see, of course, massive put strikes way out here. Not expecting to get anywhere near that, but the calls, pretty light on the call side. So might see the markets push up just a smidgen. Maybe 660 to 670 makes sense. Kind of hard to say, but either way, there are a lot of puts, which usually indicates we're not going to fall too far this week. Moving over to the economic calendar, there was nothing really for this upcoming Monday. Tuesday, not much here either. But for the Wednesday, CPI for the Eurozone, FOMC minutes is going to be interesting. Want to see what they have to say there, especially because there's been a lot of disagreement about a potential cut in this next meeting. 10-year tips down at 1.7. Want to see what those come in at. Existing home sales, not a whole lot there. And then for the Friday, Michigan inflation readings, global manufacturing PMI, and that is pretty much it for the week. Moving over to the charts, looking at the S&Ps here, you can see it was basically flat on the week, 0.08, right at that 9 EMA, and you can see the momentum probably going to step to bearish here next week. RSI already stepping to bearish a little bit. VWAP also in there at 6,646, and then you can see the trend support in here around 6,600. Eventually, this is going to roll here pretty soon. You can see once it steps to bearish, like we saw back here in December of last year, that was kind of the start of this topping pattern. Almost to the same here. You can see 16 December looks a lot like the week we just had. And then you got 23 December, basically the same as the week this last week. And then you can see consolidation for a couple more weeks before that bigger sell. So still not really claiming that this is going to sell immediately, but I do think over the next month or two, that's going to be very, very close. You can see these EMAs on the MACD are about to roll. Good volume on those last couple of weeks, and I think it's a fair bet that the top is likely in. And then looking at that chart here on the daily chart, you can see high, lower high here. 55 EMA continues to be support. That's going to trend higher over the next couple of days, and then this will continue to roll down ultimately. But I think this is the start of a topping pattern. Moving over to the Tasty charts here for the SPY, you can see that upper ATR band hit that zone, sold off over the last couple of weeks. 9 EMA continues to be support. Right now that is at 667.93, stepped up very slightly from 666. Either way, this is starting to level out, and there has been a lot of volume on this rally. This is starting to peel off from that upper band. We were riding it for a bit, but that momentum is fading. You can see volume weighted MACD also bearish. Still very much bullish conditions on the weekly chart. Your trailing stop right now is at 632.14, but you can see we are right at that potential for bearish conditions. On the daily chart, didn't quite flip there, but the NASDAQ did, and then ultimately looking for that lowest ATR band in the short term, that would take you to 654.50. Moving over to the NASDAQ here on the weekly chart, you can see down 0.21 on the week, momentum very close to stepping to bearish conditions. RSI already bearish conditions, 9 EMA still support at 24,915. Once this zone sells, I think it'll come down to the trend line around here, 24,230. 21 EMA in there, 23,976. 55 EMA all the way down at 21,985. That is very much the concern, right? That this structure breaks and we end up falling at least another 10, maybe 12% from here. And that is absolutely a possibility. Still very much a bullish structure with a high, much higher high, looking for a low, potentially higher low here. But again, that higher low could be a lot lower from current price on the weekly chart. And then looking at that daily chart here, again, very much considering that top to be in. You got a nice peak, consolidation, volume ramping, ended up selling out of that, hit the 55 EMA, bounced slightly, zone of resistance, 9 EMA held as resistance, sold back to the 55, overthrew it pretty substantially. Got a little bit of a neckline here between 595 and this kind of 600 area as a zone of support for now, but ultimately I think this is structurally going to break, and then you're going to be looking for that next zone of support in here at least as low as 566 to 571 in here, while that 144 EMA catches up into that area over the next couple days. Moving over to the Tasty charts, again, same kind of thesis coming off of that overextension upper ATR band right there, 636.95. Didn't get anywhere near it this week, overthrew it last week and then sold. And then you can see 9 EMA as support, 605.95, held that on a closing basis. Trailing stop all the way down at 569.32. I think we'll probably come into that zone over the next couple weeks, couple months potentially, and then we'll start to see, is this going to consolidate? Is it going to be able to hold some of these gains? Or are we going to pull back a little bit more to that lowest ATR band in there around 530? Certainly some things to watch here as this rally starts to slow down at least a little bit over the last couple of weeks, and you can see bearish conditions on the daily chart now. Your trailing stop is to the upside at 644.16. We had that here for a little bit, pushed through there, hit the upper band, and now you have a high, lower high, selling off here, lowest ATR band on the daily chart down at 589. I think we'll probably see a test of that at some point in the next week, maybe 2 weeks. Moving over to the Russell here, you can see the Russell was down 1.71% on the weekly chart, all the way down to that 21 EMA, touched that level, 233.41, tagged it closely, and then bounced from that zone back towards that 238 level. But that is 3 weeks in a row of selling. Hit that first 21 EMA. Is this the start of a potential bounce? And then that lower high or a double top in here, midpoint set in now. I think that's likely to be what we get on the weekly chart, which means a couple more weeks of potential bounce in here, and then we'll start to see that sell over the next month or so. And then you can see momentum stepping to bearish, RSI stepping to bearish volume there. So everything says this should continue to fall over the next month to 2 months. And then looking at the daily chart here, you can see very consistent high, lower high here, 21 EMA as resistance, big sell off of that level. Starting to see those EMAs cross on the daily chart, which means this will likely sell a little bit more, even if we do get a bounce in here. Still expecting probably a retest of this area here around 242, 243 area, and then bigger sell from there down to 226 at least, maybe as low as 220. Either way though, it's been a long rally, starting to see that retracement start in my opinion. Moving over to the Tasty charts here for the IWM, the trailing stop right now is at 215.95. I suspect that is where we will fall to, at least on the weekly chart over the next couple weeks. Again, I don't think this is going to fall in a straight line by any means. Might see a bounce here and there, lower high setups, but eventually I do think this will fall to 217 area, and then we'll see what happens after that. Is it going to hold structure and bounce, or is it going to cut right through it like it did here? Of course, that remains to be seen over the next couple of weeks to couple of months. And then looking at that daily chart, managed to stay in bullish conditions just barely. You can see how much we overthrew that trailing stop at 236.56, got all the way down here to 233, and then bounced back above the 89 EMA and that trailing stop, sitting there at 235.99 or so. Eventually this will continue to sell here. You can already see the upper bands rolling to the downside, lower bands flat for now, but likely to continue to roll here as this starts to change structure. And it kind of already has here with a low, lower low, high, lower high, 21 EMA as resistance. Everything says this should sell over the short to medium term. Moving over to the Dow on the weekly chart, you can see the Dow really did push really aggressive here, right up to that trend line, touched the trend line, gave it all back through the week, finishing positive, but still way down from that high, just 0.41 on the week. But look at that volume coming off of that rejection. Again, does not look great. Wicked the high from 2 weeks ago, and then last week looks like this is going to potentially sell here some more, but the Dow has hung in there really, really well. You got the trend support in here. Let's go ahead and extend that out for this week. Gives you some support in here around kind of 470 potentially. 21 EMA would be that next support down there at 455. Again, still expecting this to kind of chop sideways through the trend structure, maybe break that this week. Momentum, maybe got 1, maybe 2 more weeks before this flips to bearish, and then once it does, this will start to show some structure like this, and then that bigger sell ultimately is what I am looking for. But for now, still just looks like the start of a topping pattern. Moving over to the equal weighted S&Ps, you can see 3 weeks in a row of negative price action right to that 187.62 area. 21 EMA was support again here at 186.89. We've tagged that 2 weeks in a row. Eventually this is going to break through there and eventually sell down to that 55 EMA. In my opinion, that takes us down to 180.50, and that would bring you about 3.5% lower. You can see momentum bearish, big volume on that sell as well. Tried to go higher, and it looks like that is going to continue to sell this next week. Moving over to the ratios here, you can see SPX divided by the Russell, big spike there. The Russell is definitely rolling over more aggressively. Tech hasn't been doing amazing, but it's still doing better than the rest of the economy. And then you can see the NASDAQ versus the SPY. NASDAQ has been underperforming, selling 2 weeks in a row. Structurally, this is not quite broken yet. Trend in here around 3.7, held up, tagged it, and then bounced a little bit. Is it going to cut through there? 21 EMA at 3.68, and then the level I've been watching, 3.66. This is a very high level for this ratio. This is as high as it has ever been, but I do believe that we'll see this start to roll here. Momentum likely to step to bearish there. RSI already bearish, and then the NASDAQ will probably lead us lower. Moving over to the SPX divided by the M2, that is still holding up at this level, 30.14, 3 weeks in a row. in this same area, wick rejection, tag the level, tag the 9 EMA, hit that zone. Is it going to sell through there? 21 EMA at 29.50. If this breaks, there's a good chance this could go all the way down to the 144, all the way back down to 24.90, 25 area. Ultimately, I think this will retrace back below 22, and then we'll see what happens back down here. But this has been a monster run. Last time we were this high, we ended up falling a lot from here over the next couple years. Moving over to the Mag 7. Mag 7 sold off 3 weeks in a row, just like everything else seemingly. Down just 1.2% this week, back below that level. 357.91, 21 EMA was support. That's the first tag of the weekly 21 EMA. Momentum and RSI bearish. You can see volume did kind of decline over the last couple of weeks of selling, but peak selling here, continuation selling here, still elevated volume. Similar to what we saw here in the start of this consolidation, and then eventually this did start to go lower, right? And then that next dynamic support is going to be the 55 EMA, which is about 9.5% lower. So seems like that's what we're going to get. I don't think this is going to break structurally quite yet, but eventually it will. Moving over to Apple and Microsoft. Apple was actually up 1.47%, still has that overhead resistance at 275.91, and then you can see very clear topping pattern here on Microsoft. Peak high, got a low double bottom in here. Is it going to consolidate, or is it going to cut through there and ultimately go down to that kind of 450 area? I still think this has a lot more selling to go. You still have some gaps in here left on the daily chart. Momentum is bearish, RSI is bearish. Volume on this most recent sell definitely elevated here, and everything says this should sell. 21 EMA right now is your overhead resistance on the weekly chart. That is at 510.48. Moving over to Tesla and NVIDIA. Tesla was down 5.86% this week. Big breakdown of this consolidation structure. Tried to go higher, couldn't do it. Fake out, breakout there. Sold off. Momentum bearish, RSI bearish. 21 EMA is your support there at 374. On the weekly chart, we'll see if we can hold that zone of support. 384 did hold with the test this week. Either way, though, momentum is definitely stepping to bearish, RSI bearish. Volume ramping on the sell. Everything says this should go lower. And then you got NVIDIA still hanging in there really strong, bouncing off of our support zone between 180 and 184. Touched that zone again, bounced. Momentum is bearish, RSI is bearish, but this is NVIDIA and it's not likely to crater or really even break down very much. So far, the structure is still bullish. Moving over to Meta and Alphabet here. Meta has been cratering really aggressively since their earnings, down 4% and then down 2%. It is slowing for sure. 602.95 was my zone of support. Tagged that last week, tagged that 2 weeks ago, tagged that last week. Huge volume. Everything says this should continue to sell here. Next zone of support for me, 564.51 is my next area there. And then all the way down here, this low from April and the 144 EMA is all the way down at 489. And then looking at Alphabet here, still bullish, right? Bullish move here, bull flag, breakout. But now you have a consolidation selling off from a zone here. We were watching for the breakout above these 2 weeks, the high from these last 2 weeks. Did a quick fake out and then sold off down 1%. Looks like this will probably fall back down to that 9 EMA at 259.91. Moving over to Amazon and Broadcom. Amazon was down 4% or so on the week, 2.33. 233 is the zone of support. Next is this dynamic support just below there around 227. We'll see if that zone holds or not. Momentum stepping to bearish, RSI stepping to bearish. This is coming off of an all-time high. Still would expect this to hold a higher low potentially. And then looking at Broadcom here, you can see the high, higher high, still low, higher low. So structurally not broken. Momentum is bearish though. RSI is definitely bearish in the short term. Moving over to staples and discretionaries, you can see staples did bounce on the week, 0.72 off of that 200 SMA on the weekly chart. The level there, 75.40, overthrew the dynamic support to the horizontal support, hit that zone and then bounced. Is this another bounce here? And we're going to get that continuation back into this area, kind of like we did here, got a really strong push for the next couple of weeks? Or is this going to be a lower high in here, and then we're going to start to see this structurally break? I think that is kind of the two scenarios we're looking for. I don't think staples is going to crater. I think people are going to be looking for staples at this point. And then looking at discretionaries here, you can see 2 weeks of big selling. Right at the low here of this double top, 21 EMA is support at 230, and then 55 EMA is all the way down there around 220, my level 219.18. That would be the zone of support on that next move of about 4.8% to the downside. Moving over to semiconductors. I got asked about semiconductors, so let's take a quick look at SMH here. You can see pretty nice channel here, marks this bottom, got this kind of trend line started, hit that same trend structure, in September, hit that same zone again most recently, and then we dipped below it for the first time in a long time. 55 EMA is still support at 331.71, and then once this structure breaks, that 144 will be your next zone around 290, which gives you about 15% of potential downside there. You also have the 9 and 21 EMAs crossing, indicating a flip to bearish conditions. You can see we did have a little bit of a head fake here before we rallied up, but we did not dip below that trend structure, and now we are dipping below there, and I think this will eventually sell momentum bearish, RSI bearish, volume ramping on that sell as we continue to kind of downtrend on this structure here. You also have 346 as that horizontal resistance. It was resistance here, tried to hold this support, and then we dipped below it, closing below it 2 weeks ago, closed below it last week, and then ultimately this will likely sell over the medium term. Moving over to 20 and 50-day breadth. 20-day breadth sold off 3.6%, wicked that area of resistance, and then sold off, expecting at least one continuation here, back down to 28.21 or so, and then looking at 50-day, continues to sell over the last couple of weeks, hit that zone of resistance, and then sold off again. Support in here has been around 35 or 36 or so, but usually we don't see a significant bounce until we get into this kind of 26 area, so that's kind of what I'm waiting for over the next couple weeks. Moving over to 200-day breadth here, you can see this high, lower high setup here continues to sell to a low, lower low. Got a retest of this area, still expecting this to sell back off here. This continues to downtrend. It's been downtrending for a while. Got one spike down, looking for that second spike down. I don't expect it to be as low as this one. I still expect a higher low in here, but then we'll start to see that change in structure. But for now, this still looks like a top, and it is rolling over pretty aggressively here over the last couple of weeks. Moving over to the dollar here, you can see the dollar has been forming this bottom for a long time. We got up to that 99.83 level, got a little bit of a sell-off. Maybe this comes back down and retest this structure here, holds that support, and then rallies through. I would like to see it hold up a little bit better than that, but at this point it seems like we're going to come at least to that 9 EMA around 98.71, and then we'll hold that zone hopefully, or the 21 EMA in there around 98.2. Hold this zone in here, and then we'll get that bigger push. The dollar seems to have based off. The bigger question is, how nice is that rally going to be, and how substantial is it going to be? You can see we've seen long bases like this before, come in low, double bottom. You got this low, double bottom, rallied out, and it did last a very, very long time from there, but it took a long time to kind of get going. I still think that's going to happen, whether it's that aggressive or not. I still think the dollar is going to have a pretty substantial push out of this area. Moving over to bonds, J&K held the level 96.50, continues to look like it's rolling either way. 9 and VWAP rolling there. This will likely continue to roll. Still think it will. And then looking at TLT, surprising to see this sell off as much as it has. I was bullish back here early in October looking for a test of that 92.82 level, but now we're pulling back to the 21 EMA. I think that zone's going to be interesting. That'll be there at around 88.34. If it tests that zone and holds, then we should be looking for that bigger push out of that area, but momentum rolling to bearish, RSI rolling to bearish. Again, similar to the dollar, got a pretty solid base in here. I think this will spike up eventually, but at this point it's been in here for months. Moving over to the VIX. The VIX has been positive the last 3 weeks. Still think this is going to go at least to that 28 area. Momentum bullish, RSI bullish, everything here on the VIX says this should go higher over the next couple of weeks. Moving over to my accounts, I am basically just long dollar here at this point. I took off a lot of positions on the Friday where I had covered calls on the Russell and the NASDAQ, but the structure here just does not look great. I can still play the long side with some puts, which I think is probably going to be a better position. Take some short-term profits where I don't have to stay in and wait for the calls to kind of expire. If we get the rallies out, which are usually pretty violent in downtrends, then you can take the profit on those. But for now, I think the structure is definitely bearish, or at the very least a topping pattern. So right now, just long dollar. This is getting very close to expiration. It's already at a 50% loss. I'm probably just going to sit it out on the dollar. We'll see what happens over the next couple of weeks. Basically a month left till expiration. We'll see. Let me know down in the comment section what you think of the rare earths play or the copper play. Are you trying to get into uranium? Let me know. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.